Joe Bladek here, joining you from outside today on this great Thursday on Canadian Mortgage Weekly Live at 11:30 today. Hope you're all having a great day and that you can all see us today. I'm joined here with Sam Thompson, mortgage agent as well. Sam Thompson has been with Mega Mortgage for over a year. He's married and lives in Barrie, originally from Ottawa, and has been really rocking it with the first-time buyers and helping our clients refinance and get ready for anything today. And Sam, welcome to the show. How are you? Welcome to episode 22.
Hey, yes, thank you for having me. Yeah, it's so exciting that we're already at episode 22. So happy that everybody who's watching was able to join us. And of course, as Joe said, he's outside today enjoying the lovely sunny weather. And yeah, so Joe's been in the mortgage industry for over 10 years. Just a plethora of information, working with new buyers, refinance, investment properties. So yeah, it's really, really good to be on with you this morning, Joe. I think we have a really exciting episode scheduled for today. Yeah, I'm really excited to get into it.
Yeah, we really do have an exciting episode today, everyone. On episode 22 today of Canadian Mortgage Weekly Live, we have Sam Thompson. He's going to be leading our show today with our brand new series that we're really getting into. It's called Spring into Summer, and we'll start that in just a moment. And Sam will be going right into all the different, some of the different projects that people do in the summer to get their backyard ready. So he'll be giving us an example as to exactly what it looks like to add on a whole backyard oasis. So it's going to be great, Sam.
Yeah, I'm really excited. Really excited.
But before we get into that, we need to talk about something else. It's your birthday this weekend.
It is, yes. It's my birthday, and it was your birthday last weekend. And it's Terry Lynn at the office. It's her birthday this weekend as well. So it's birthday month for the Mega Mortgage North team.
Yeah. We all have May birthdays here. It's funny how that all worked out. Well, any plans for your birthday this weekend, Sam?
Not a whole lot. I guess, yeah, it's birthday number 2 in lockdown. So I find you have to get really creative with finding ways to stay indoors, but still make it, fun and exciting. I think last year we had a projector outside and we did sort of like a drive-in inside. So I don't know, we might do something like that this year, but we'll see. Try to keep it fun.
Yeah, that does sound fun. Do an outside movie, an outdoor sort of drive-in thing. We don't have to clean up the crumbs after you're done.
That's right. That's the hardest part of COVID, is especially being in a basement apartment, is getting outside, right? When work from home is all at the desk, it's hard to feel like you're actually, getting out enough when there's not much to do outside. So
yeah, you bet. Well, I hope it's a good birthday for you this weekend.
Thank you.
And we can get started with some news and updates that we have in the mortgage industry today. Sam, one of those things is that we have that new stress test that just was announced officially last week that's coming out on June 1st.
Yes, this was a big news, right? Because I know that we had mentioned it before when we had talked about thinking, they're increasing the stress test, but originally it was just for uninsured mortgages, correct? And they changed that last minute.
That's right, they did. And you know what it was? It was really a recommendation from OSFI, which is the governing body for Canada's mortgage industry. And they last minute suggested there that not only uninsured mortgages to be subject to the new stress test, but also insured mortgages, which will in turn end up affecting a lot of first-time home buyers this year.
Absolutely. It'll definitely shift where we thought it was going from, sort of hearing the guidelines prior to the most recent announcement that everyone's going to be affected by this new change.
Yeah, that's right. And I think, Sam, it's approximately, depending on the person's profile, between 4 to 5% of a purchase price reduction at this point.
Yeah, that's right.
Yeah, but the good thing is that there's a first-time home buyer incentive, which, Sam, you did a special on just a couple weeks ago there, 2.0, and that will in turn help first-time home buyers qualify for a little bit more, even though there's this new stress test that has just come in.
Absolutely, absolutely. Yeah, if you're purchasing in the GTA, then it's definitely still available, and it really will help you, not take as much of a hit from this new stress test. Because I know when we worked out the theoretical max, I think it was over 700,000 was your sort of maximum range. So hopefully that will still be able to, allow first-time buyers to participate in the market and not, be pushed out any further. So.
Yeah, absolutely. But in terms of first-time home buyers, if you're a first-time home buyer in Toronto looking to buy a home, we recently saw a home without any bedrooms sell for, was it $1 million?
Yes, it was $1 million. It sold. And I'm blanking on the area, but yes, there was no official bedrooms. I think it was classified as an open concept. I think there's 2 bathrooms in it, but besides those 2 rooms, everything else was open, and it sold, yes, for $1 million.
I can't believe it. Well, it has been picking up quickly here. I have noticed since the long weekend, there has been a lot of active buyers out there that have hit the market since Monday. And maybe, Sam, that's to do with a lot of the fact that, people see these new stress test rules coming in on June 1st. They want to get their purchases in by that point. So I can see that the activity has gone up since then, even though really at the end of the day, the banks aren't really judging the stress test based on the offer date. This time around, they are applying the stress test to all mortgages that close after June 1st, 2021.
Right. Yeah. And it's hard to find a lender that'll get you a fully approved mortgage in, 4 days now, around the 27th?
That's right. Mm-hmm. But anyway, as it's getting busy, we wanted to start this new series for all of you, spring in the summer. And Sam Thompson will be actually leading the presentation today. Sam, tell us a little bit about what we're talking about today. I'm really pumped to talk about this with you.
Yeah, absolutely. So our video today, I'm going to primarily be focusing on any homeowners who had thought about putting a pool in. We're looking at, their deck is in disarray and they want to update it or even add a brand new one. How they can go about doing that using some of the equity, because I know, we don't have our AC unit in yet, so it's been really hot. So the idea of having a pool has been at the top of my list. So I'm sure that I'm not the only one, and there's lots of homeowners that have been chatting about this. You have all the family at home with school being online, so we really wanted to jump in and take a look at how you can refinance in order to get that money to do those renovations and installations.
Oh, that's fantastic, Sam. So that's great news, because as you mentioned, I've heard a lot of people want to move this year and last year to a home with a pool, maybe more private backyard with a fence, or just have that outdoor space with a deck, right, that you're talking about. So instead of moving during COVID, an alternative solution would be to refinance and improve your own home to include those improvements right there.
Absolutely. And deck space is definitely nice to give some extended square footage of where everyone can hang out, so you're not, in the same 1,000 square foot house. You can, branch out a bit and get a bit of your space back.
That's right. Yeah, that's really important, especially in COVID times right now, because a lot of us are home and, it is hard to all be inside. Especially when you want some privacy or are doing something important that you don't want to have any concentration broken on.
That's right.
Yeah, or just to relax and get away from it all. So yeah, why don't we get started there? I know, Sam, you have a nice presentation planned, and we can share with everyone there just a little bit about these projects that they can take on this summer in 2021, how it's going to affect their mortgage, and how it's all going to work out on their financing. Absolutely. Great. So I can see your presentation there. I can see your desktop now.
Perfect. Alrighty.
Perfect.
So yes, as we were saying, this is going to be part one of our spring into summer series. I thought I'd kick it off with a nice, appealing pool. It's got the waterfall feature in the back. You might not go as fancy as this pool, but I thought it was a good picture to really get us started into what's involved in the process, and looking at how you can, as Joe was saying, get those funds, tap into your equity to make these changes possible for you. So again, as we were chatting, there's a lot of different factors that could go into thinking, this is the year we're putting a pool in, or we're upgrading the deck. If you're in a situation where you had bought the space thinking the backyard's big enough for it, maybe that's a future project. And again, now, like we're saying, COVID, it's hard to get out, it's hard to do things. So maybe now it's starting to linger and get a bit more serious in your mind to put it in. And again, as we were saying, expanding your deck or renovating an existing one. And, Joe you commented as well that there was people that were also interested in, potentially selling and buying a different home that already has a pool or more privacy. But, that maybe isn't available to them. It's too much of a hassle to move the whole family, especially during this housing market that we're seeing now.
Yes, absolutely. You're right, Sam. Moving can be very stressful. You need to pack all your things, get financing arranged, and also change all your addresses. It can get very intense. So sometimes just remortgaging and having the improvements added to your existing home is the better way to go. And people can save that way too by staying in the market, and also not having any mortgage penalties or possibly lower mortgage penalties, or and not have to pay land transfer tax again, moving expenses, all those expenses that do come up, including legal fees when you're moving.
Absolutely, yeah. So that's the illustration, or what we're going to chat about today is we're going to look at a case study of some folks who decided to refinance their home to make this dream possible. So again, Joe had listed a number of these things a minute ago, that when you refinance for that backyard renovation, you tap into the existing equity that you already have, and it gives you those funds so that you're not paying out of pocket. You're not going through the hassle of moving, or all of the additional fees and stress. I think moving is one of the number one causes of stress, or at least top 5 on the list. So we want to make sure that on top of COVID, when everyone's already up and down, there's just a easier scenario where you can just refinance your existing home.
You bet. Yeah, that's way easier to do.
Mm-hmm. And the other benefit is that you could actually benefit from a lower rate. If you had locked into a 5-year fix a number of years ago, we've been experiencing some pretty low rates, haven't we, Joe? So if they refinance to do this addition, they could also, refinance their mortgage into a lower rate altogether.
Yes, they could very well. And like you're saying, just a few years ago, rates were higher. And because of COVID, both fixed rates and variable rates have come down. The Bank of Canada has been saying that rates will eventually go back up. The news articles have been saying that rates will eventually go back up, but they're still at historic lows right now.
Mm-hmm. Mm-hmm. Yeah. So it's really a great time to do this refinance. And again, it lumps all of the payments together in just one, monthly or biweekly mortgage payment. I know that there also are a lot of people that, say they got a line of credit to make all of this possible. Now they're juggling the 2 different payments. They could have a higher rate on their line of credit. So this way it's all in one payment, and that goes for the mortgage as well as the renovation. And at the end of the day, it will add value to your property, not even financially, but just in, your availability of hanging out in your backyard, having fun where you're living, not waiting till, later to do these advancements.
Absolutely. That's the key thing, and just being able to enjoy them right now instead of later when you move.
Mm-hmm, absolutely. So let's jump in and meet Mike and Rachel. So Mike and Rachel is our couple for the case study today. So they are one of the homeowners who've decided, you know what, it's time to have a pool. We also want to update the deck. So just looking at sort of some average price range. It may be different depending on your area. If you want a waterfall feature as well as a sauna, maybe. But this for just a estimated value of your the installation of an in-ground pool of about 60,000, and adding the deck and the fencing, we'll round that off at approximately 50,000. I mean, we've been noticing and commenting on the price of lumber lately, so that could fluctuate as well. That 50,000.
Yes, it definitely can. I mean, with lumber the way it has been, that this renovation may have cost a little bit less last year, but well, 50,000 I think is a appropriate amount for this year.
Absolutely. So the total renovation they're looking at is going to be roughly 110. So in order for them to refinance to have those funds available for them, they're going to need a couple things. So they'll need to pay out their existing mortgage. We'll have to add in this $110,000 for the renovation. And we can also add in an estimated legal fees and then any mortgage penalty to break for the refinance if they're in the middle of their term they're currently locked into.
Okay, fantastic.
So looking at what the numbers are, so a bit of a backstory for Mike and Rachel here. So they had purchased back in 2018. Their house was approximately $400,000, and their rate was actually 3.19. So at the time, I'm sure that definitely seemed like a low rate. If you saw that now, you're thinking, no way, I need a new mortgage broker. But definitely we can get a lower rate than that.
Yeah, definitely. I mean, a few years ago, 3.19 would have been a fantastic rate, especially in 2019 there, when we saw rates climbing in the beginning of the year. Obviously, that sort of rate these days is a little high, so it's best to shop around. And yes, Sam, you got a better rate there right away.
Yes. So currently, they've been in the home since 2018. The remaining mortgage balance, they've paid it down to about 329,000. Their payments are looking at 1,738, and we've approximated a penalty because they're a few years into the term, at about 3,500. So we've seen their home has now appreciated. It's now worth $600,000. And now we just have a total of what we'll need the new mortgage to be to cover off all the expenses, so that it also saves you from paying out of pocket for any of the legal fees or mortgage penalties that will incur from doing this refinance.
Okay. Looks like you thought of everything there, Sam, because you do have the renovations in there, legal fees, and sometimes legal fees could be a little less, but you've overestimated it, so that's really good.
Yeah, and any addition when we run through a refinance, we typically like to be conservative so that you're not left at the end still paying more. And any additional funds that aren't required, they go directly back to you. So if any of that 2,000 comes back to you, you can put that into buying some chlorine for your pool, maybe some a slide feature for your kids. Whatever that extra leftover money, it's yours to do with what you wish.
Fantastic.
So now looking at the new mortgage that we were able to get them set up with. So the new 5-year fixed rate they're signing for is a 2.34. And now their payments for everything that we've just gone over, the renovation, the paying out previous mortgage, all the legal fees and penalties, they're now only paying $1,720 on a 30-year amortization. So we're actually saving them, almost $20 a month, which is pretty cool when you think about it, that they've done all these additions. They have a new deck now, they have new fence, and they just got a brand new in-ground pool. And they're actually saving money in their monthly payments compared to where they were before.
Yeah, that's such a fantastic example, Sam, because a lot of people are in the situation right now that you have exactly described. We see people like this call all the time, and with mortgages typically being broken like around the second and third year in, I mean, this is an appropriate case study for sure. So just being able to see that these folks have a lower payment, but they've been able to add on that deck, they've been able to add on that pool, they've been able to install that fence to give them the privacy in their backyard. That's absolutely fantastic.
Absolutely. And it's definitely, a real improvement when you look at the fact that now their yard space has so much more purpose. It's so much more of a usable entertainment space for the entire family. So that, when it's less convenient to go to a beach, or, the public pool has been closed for COVID, you guys have your own private pool in the backyard. So that's really what we like to see, is that people are getting, if they were thinking of going into the home when they purchased it with one day putting a pool in, we'd love to see that dream, realized, and actually be able to save you some money in the process. So it's definitely doable. And, the results that we have here are really exciting, and really happy to see for this couple.
Oh yes, absolutely. So I would like to just extend out a invitation that if anyone is watching this presentation right now, as Sam's discussing these examples, and you feel like you want to ask a question, either live, online, drop a comment below, or send us a private message, and we can start the conversation into putting together a customized plan for your situation. Perhaps you have a home right now that you are living in that you want to see what the numbers would look like for a similar type of renovation.
Absolutely, absolutely. We'd love to chat with you to see, where it's at, what funds we, can get available, and a new rate that we could secure you into. So again, as Joe was saying, you can either reach out to us by commenting on this video. If you know somebody who you think should watch this, tag them in the video as well, or share the post. We'd love for this information to not just go to you, but to go to anyone that you think this would apply to. And you can always call us at our office line of 705-238-3479, or email us at joe@joebladek.com. We would love to chat with you to, get working out what you could qualify for.
Yes, absolutely. Thank you very much, Sam. That was a really great presentation, very, very well laid out. And I think that it gives a lot of people a good example as to what they can expect when they go to refinance their mortgage and add on these improvements and upgrades to their home. A lot of people, when they call in, they really don't understand, my payment will be lower right now. They don't understand that my interest rate will be better, and I can stay in my home. So obviously, sometimes moving is the right thing. But if you are considering staying or haven't found what you're looking for, give us a call. We can work out the numbers. And if you still want to move, we can then refer you to a really great local real estate agent in your area. But in the meantime, we have an exciting announcement, and that would be that next week we have a brand new episode 23, coming out for Canadian Mortgage Weekly Live, Sam, which you'll be joining us on as well. We'll be talking about, I think, is upgrading big ticket aging items in your home.
Yes, yeah, that's another big one, especially as we enter into springtime and you start to notice, maybe the shingles are starting to curl on your roof, or, there's some ticket items that you've been sort of waiting on, hoping that, there's an improvement or a cash flow. So I think that'll be a really great episode to go through as well.
Exactly. You mentioned a good point. Doing a roof is a really good opportunity to put that into your mortgage, because right now with spring, summer, it's a good time to do your roof. The rain is low, and during the summer, you want to get your roof done before the winter hits, before the ice piles up on it and the snow piles up on it, because you don't want to be doing your roof in the winter time. And if there's any other big ticket items, perhaps you have an older furnace, or like Sam was saying, some of us are waiting for our AC units to come in, and just get an AC unit in. We can add those on as well. We'll be covering that off next week as we continue our 4-part series here on Canadian Mortgage Weekly Live. All right, well, so thanks for joining us. Sam, is there any questions live right now just before we head off for the day?
We don't have any at the moment, but definitely, again, write your comments on the video or privately message us. We'd love to chat with you about any questions you have for today's video.
All right, thanks very much, Sam, for the presentation. I hope you all have a great day.